All right. Well, welcome everybody. Hi, Stormy.
Hi, John.
So we're here today and we're leverage and we're going to show you guys how to gain leverage over commercial lenders. Sounds fun, right? So thanks for everybody for coming in. I'm going to give this a couple of ticks here for people who might be coming late to hop on. These always are a lot of fun and people tend to get a lot out of them. So I try to start at the front end when everybody's here. So we are a software company. We are not a lender, but obviously lenders like us because people who use our software are the people that they want to meet.
Right.
So what do you think, Stormy? Should we start up?
Yeah, we are Facebook Live, so we're
Cool.
ready.
We're ready. We're live. All right. So how do we gain leverage over commercial lenders? So let's say that we are all property owners of some level or want to be property owners. Investment property is what we're looking at, multifamilies, two families, even single families that we're going to put together and try to purchase and flip or keep. And we need to be able to get ourselves financing for that today to keep moving. We could also be a business owner and we didn't get PPP. There's a lot of us out there and we have a good business with opportunity. We do need a credit line to be able to keep moving. So those are things that our software can help you with as you approach a commercial lender in a whole new way than what you probably have ever done before. And by doing it this way, the way we do it, it'll give you an advantage. So we'll start right in. So who's presenting today, right? We'll go through myself and Stormy, a little history of who we are, our overviews, some of the reports that we use as we communicate with lenders, and then we'll do a demo of the software, which is really why you guys are all here. And we'll get to that in probably 5 minutes or less. So me, geez, old. Look at this. 30 years in the business of property development and business ownership. That's probably the only thing that makes me different from a lot of people here today is I've survived through 3 recessions in this business, call the last one 4, if you'd like. When you're my age, you've done a lot. So if you've been doing it since your 20s, you get into transactions that do total into the millions of dollars. And my main focus is multifamily, mixed use residential developments. We get into storage, we get into a whole bunch of different stuff in our development business. So, who's with me today?
Hello, everyone. My name's Stormy Scott, and I'm the Business Development Manager for Leverage. But just a little bit about my background. I originally started out in the banking world as a personal banker, and when I left that world, I was a branch manager at a regional bank. And one of my favorite things to do in the whole entire world is teaching financial literacy classes. And I did so for different businesses and organizations on different topics involving personal and business financing. But for everybody who is live on Facebook today and who's joining us in our Zoom room, I'm going to be your point of contact for leverage. So what I'm actually going to do is put my email and my Calendly link in the chat below so everybody can see it. So if any questions come up that we don't get to in the Q&A, and or if you want to schedule just some one-on-one demo time with me, you can do so. So I'll put that in there here shortly, and I'm going to hand it back over to John.
Right on. So, Stormy, you weren't around in the 90s, right? Can't remember. So at least you weren't working for Leverage then, right? So history of this stuff goes all the way back to the 90s. So when you're in the business we're in, you need to have tools to be able to use. What's funny for all of you is that's when the first cell phones actually came out for guys like us to use. So we all had our own programs that we used in our private businesses to be able to vet transactions before we went to lenders. So as we moved into the 2000s and we got into the middle 2010s, we realized that this thing could now be capable of putting into the cloud where everybody could use it. So that's the version that you have today. Leverage in its original form has been used to vet billions of dollars worth of property transactions for financing purposes for businesses and for commercial real estate properties by several people. The original founder used it in his business, and then he and I became partners, and now it is mine to do. So Leverage affiliated back with the BankerShare platform in 2020 and moves forward in the version that you see today at leveragecalc.com. So this has been around quite a while and it's been used in a lot of places. So we're pretty comfortable with the algorithms and what we have work for commercial lending purposes. So here's what we do with leverage. So as a property developer, this is what I do as an investor, right? I'm going to identify reliable financing sources where I can provide them information quickly. I'm going to package the information to meet the lender requirements. Think about that for a second. So I'm going to be able to know what they want going in and feed them quickly and effectively what they want so that I get an answer quickly. I can create a targeted presentation to engage with a lender using today's technology tools. And when I do all of that, I gain an advantage. So sometimes for those of us that are out there doing a lot of transactions, people who are experienced on here today understand what I mean. People who are starting out say, geez, I want to get to the point where you are. Really, the difference today is just using the tools. And most of you who are younger than me are much better at the tools than I am, even though I own the tech company, right? So leverage report. The leverage report is what you're going to see used by us today in the demo. The report has all the transaction metrics that lenders are looking for upfront, which empowers your funding conversation on your terms. So when you actually begin dialogue with a lender on a property now, you're going to be able to feed them a one-page report, which gives them all the information they need to understand your transaction quickly and move forward with you. And then we've teamed up with transaction ready lenders who are inside the software. There's over 100 of them that we are able to work with through one source. And we're able to connect ourselves and our leverage customers with them for fast and streamlined financing, because let's face it, if you can make our software work, the lender wants to meet you, as you will see. So with no further ado from me, let's get into a demo of leverage finance software for those of us who are property investors today. So we start with logging in. So we go to leveragecalc.com and we're going to log in. We're in the cloud with this software, which means we can use it on our phones right in front of a property, which is really cool. All we need is an internet connection to make this work. And we have a username and a password to get in. So we log in. And immediately we come to our dashboard. See, good afternoon, here I am. And this shows me recent projects that I've worked on. And then all the rest of my projects are down below, but these are my recent projects I've worked on. So what I've done is I've preloaded a couple of simple transactions for the purposes of today's demonstration for you to all be able to follow along quickly and see. So my purpose here, right, as the real estate investor is I'd never want to overpay for a property I'm going to buy, but I have to be sensitive to my lending source. Let's face it, I don't want to put it, I want to put the minimum amount of money down on the property and I want to make sure it cash flows. If I have private lenders, I have to be sensitive to them and make sure I can cover the payments out of the property for not only the commercial mortgage, but also the private lender. So I'm going to take all that into consideration. I've got to structure an offer to this seller, and I've got to make sure I can borrow against the property effectively to do it. So let's take a peek at our transaction. We come in, let's get started. Leverage starts to walk us through what we're going to do. And here's our analysis. General information. I have pre-input all of this for the purposes of speed today, but there's pull downs and tool tips all the way along the way to help you enter the information that you need to get the answer that you're looking for. And the answer we're looking for here is our first mortgage on the property financeable by a commercial lender? Yes or no? I want to know before I even talk to a lender or frankly sign the purchase and sale if the property is financeable with the numbers that I'm proposing to buy it at, right? That's almost worth saying again, right? So I will as we get going, but that's the real crux of the difference that we can do with software today. So I'm going to enter who's preparing the analysis. Sometimes commercial agents prepare it for you using the software. In this case, I'm preparing it for myself, and I'm going to enter the property address where I'm working. So am I doing a purchase or am I doing a refi? What am I doing? Right now I'm doing a purchase. I'll do the refinance next to see what I can make as I reposition the property. So let's say I found a property, we'll just pick numbers for today, that's at $700,000 and maybe it's 9 units. Okay. So I'm going to put that into the software and I'm going to say, there's my transaction. And how much money do I need to put down? Well, I pretty much know I need to have a 25% down payment to be able to function in commercial loan space today. So if I'm putting in $100,000 myself or from a source that I have, now I need to talk about where am I getting the rest of the down payment on $700,000, or 25% is 175,000. So let's say I've got a friend, I could have several sources, the seller, a partner. Let's say I've got a buddy that wants to go in with me on this and they're going to put up $75,000. I'm going to pay them interest only, or I could amortize them. But let's say I pay them interest only. I do a 5-year term at a 6% interest rate. So I've got a pretty favorable thing going with my buddy and my friend who's going to help me buy this property. So what leverage then does is it computes off of my down payment what my loan amount will be. So this is a preset. It comes off of the information that we supply up here with the purchase price and down payment. So my mortgage amount is 525. It's 75% loan to value. I can obviously change that and put more money down. I want to have an amortizing loan, which means my payments are over time for 5 years, fixed rate, and then it'll go to variable. I'm going to shoot for a 5% rate today. I could probably do better, but I want to be a little conservative in my analysis and see where the property comes in, and I'll do it over 25 years. Okay, so I would just input all this stuff about what I'm buying and what my mortgage is. Next, I need to provide the software with the income and expenses. So I've got 2-bedroom units here, and I'm going to go in and start to populate the data. There are 2 bedrooms, there's 9 of them, 7 are occupied. Okay, and I can change this, but this is all, remember, stuff I preset. The rent is $1,800 a month on these, but I think I can reposition this property to $2,100 a month without a lot of work, but we'll see. Right now, I'm just communicating with the software for lending purposes. So I save, and now I have my income in. Now let me go to my expenses. So I'm going to input typical expenses that are part of a multifamily property. What's really good about leverage that the lenders like is things that are called carve-outs. And carve-out is a fancy underwriting term that means certain things that they want to see in the property that we as investors don't often think about. Have we predicted vacancy? Have we concluded on management reserves and replacements for the property? These are all things that lenders want to see. And the leverage computation does these for you based on commercial banking guidelines for the transaction before we speak to the lender. So we like that part. So our taxes, insurance, utilities, groundskeeping, trash, all the stuff that normally comes with admin legal with an apartment building adds up. And now we have all of our expenses in. And we say, okay, now I've put in my income and my expenses on this property. I've put in my purchase price and loan amount, right? So I've been yakking here, but this took 5 minutes to do in real life. And now I'm at the point where I can run an analysis and determine with the software whether or not my first position mortgage that I put in at that 525,000 is financeable or not. So it's pretty cool, right? I'm sitting here right now letting all of you feel what we feel. It's like you're excited, right? Am I going to be able to do this deal? So I run the analysis and voila, green and leverage is a go. Okay. So my debt service coverage ratio is the first thing the lenders are going to look at. I need to be over 1.25, and I am. This all gets explained in the welcome pages of leverage. But again, we're doing commercial underwriting here. It's pre-underwriting. So when we look at this, we need to kind of know what we're reading. So we're over 1.25. We're at 1.57, understanding our DSCR. Congratulations, it's green. You can confidently connect with a lender. How cool is that? The underwriting has applied the carve-outs, and we get into all sorts of different types of things now that you can do with the software. If you're an investor that likes to geek out, you can go to cash flow pages. All your owners' real world analysis is in here, which people really like. So this is like the real world part, the gross income expenses, and what do I make as an owner, right? 43,900 on this. Not bad for a property with this many units. If I raise the rent, right? Can I get more money to me? Sure. Look at that. That's my 2,100 in rent, right? I really want to get there. So all of this stuff gets computed by the software for us before we even begin the conversation with a lender. Now, we're excited, right, Stormy? Right? Are we going to buy this property?
I'm in.
You're in, right?
I'll give you the
1.57.
75. Let's go.
Right. You saw exactly right. See, that's the thing. You saw that cash flow. I knew you lit up and you said, wow, this is really cool. Is this a real deal, John? Right? Because you're looking at it going, we can get between 43 and 120,000 a year out of this property after we've paid the mortgage. Well, let's see, right? We were going to pay that seller 700, but we are in an interesting age, aren't we? We will have the specter of COVID for a little while, right? Over the top of properties. And we have people that are actually paying rent. And our seller of the property represented to us that there were 7 units occupied, remember?
Yeah.
So what happens if there's only 6, right? And somebody stops paying for some whatever reason, right? Let's take another look at this analysis. Aha. What does red mean?
Big difference.
The loan request does not fit into typical industry standards. Without other mitigating factors, it's not likely to be considered viable by a commercial lender. Okay. So as good as this looked, it's also very sensitive, isn't it? And we use these. This is a pro tool. I mean, this is how you use this. So now we're looking at this going, what happens if we lose a rent? Right? We're barely covering 1.00 would be, we're bringing in enough money to pay our mortgage, period, with our expenses, right? So we're barely covering ourselves on this. And if we were to lose another rent, we're putting in cash, right? So we need to be real sensitive to this. So what should we do, right? Maybe on this, we want to change our purchase price, right? Maybe we want to go to the seller at a lower number and say, well, maybe we should go in at 650 and here's why. And we can use these leverage reports to justify why we're doing it, right? So I think I'll leave this here for now just because, but let's in the interest of time, but let's say that we did change this and I lowered the loan amount closer to $500,000 and I lowered the thing down to like 640,000 or something, because I would, in this case, as the buyer, I'm going to lower this. It's way too sensitive of a property in this day and age for me to feel comfortable, even though it looked really good in the first case, right? So if I were to go back to my first case and I were to say, let's put it through a lender with 7 rents that can be verified, I would now go to the leverage report. And the leverage report is what I'm going to use to communicate with the lender. And the lender loves this because it gives them all the information that they want quickly and in front of them to consume in 1 minute or less. Here's the transaction, the loan amount, LTV, rental units occupied, sources of cash. How many times do we hear that? Where's your money coming from? We tell them, right? And then all the numbers on the property break right down. And I say, look at this, right? So if I want to give this to a lender, there's a couple of different ways that I can do it. I can print it, in which case I get a nice clean report that I can hand my lender at the beginning of the conversation. And I walk into the lender and I say, hey, I've bought third-party software that gives me a report that says that the property is financeable at the number that I'm purchasing it at. Would you like to do business with me? And the lender says yes or no at that point, right? So different things that you can do with the software as we go. And of course, I've logged out here, live demo. So now let's have more fun. So I've decided to buy it, right? So I'm sitting here today, spinning around in my chair. Stormy's putting in the 75. I'm good, right? And we're going to go buy the property. Well, we all like to reposition. And we all like to know what's going to happen down the road on property. So let's manage our lender even further. And let's fast forward and say, what happens to our property if we want to refinance it after we've repositioned it? Okay. So here's our same purchase, our same property, but now we're going to analyze for a refi in the future. All right, you guys have seen this before. Me up front, property address. Here was my original purchase price. I didn't change that, but remember I was going to lower it. So let's say I did, and I have a loan amount now 2 years from today. So I go out till the end of 2022, let's say, and I've got a current balance of $500,000 on the loan. There was my original down payment with Stormy's. And let's say we put in an extra 25,000 to reposition the property. We'll call that the CapEx on the transaction. Okay, so next, I want to cash out refi, right? And what are we going to do when we cash out refi, Stormy?
I want my money back.
Darn right. And you know what we're going to do? We're going to go
Next
buy another
deal.
property, right? Right. We're going to go use it as a down payment on another property. So in order to cash out, we've got to have a transaction that comes in at around $750,000, right? Because we put in our money plus our CapEx. So to get to 75% of that, we need a value of $1 million on this property, right? And if our loan is going to be 750 amortized over 5 years, I'm going to up the rate to 6% in the calculator now because I'm projecting 2 years from now, and I should analyze with a little bump in the market for rates, right? I shouldn't use today's rate. So I'm going to be more conservative and go up a little bit. So next, I'm going to communicate with the lender that we had some CapEx, right? We put some money in, 25,000 for repairs and upgrades. So on our income, what's cool is now we actually do have 8 rents established, right? So we cleared some of the hurdles in the market. We got some people in. We were able to get up to $2,000 a month in rent, not quite to the $2,100 we wanted. So we've still got some improvement to do, but we were able to take on another rent, which is kind of cool, right? So our expenses run pretty much the same as we had projected because we're running the property good. We're about 10,000 different in extra expenses, but we're still doing okay. And now we're going to run an analysis to see in the future if we're able to cash out refi on what we purchased, if we were able to up the rents and we were able to keep the expenses in line. And voila, we're at 1.39. Congratulations, we're green. We can comfortably connect with a lender. How cool is that? So I can grind this all day back and forth with numbers and what happens if I lose a rent. But the point is, you just saw me analyze a transaction in the beginning for a purchase, and then you saw me analyze it for a refinance on the same one where I cashed out 2 years from today, took all my money back, and I'm going to go buy another property. So this is how we have a lot of fun with the analytical side of the software. And that leverage report is how we speak directly to our lenders. Are we having fun yet? What do you think, Stormy?
Always having fun.
So we recap, right? What did you just see? You saw the software allows you to get empowered with your funding conversation on your own terms. I picked all those terms. When I go into the lender now and that software was green, I'm feeling pretty good, right? I take control of the lending and acquisition process by doing that. I use the leverage report to provide financing metrics like the thresholds and purchase prices on the property to my lender. And I move quickly through lenders until I'm funded, whether it's through the Leverage Connect or it's through one of my own lenders that I have. We're able to move very quickly and efficiently when we're using software tools. So with Leverage, pretty easy. We've got our business finance hub, our commercial property hub that you saw me just work out, and then the combination of the two. It's all at leveragecalc.com. And Stormy has it set up for you there where you get 30 days free to be able to do all this kind of analysis that I just did to make sure it's right for you before you actually have to make the decision to move forward. So I did all this, Stormy, in 25 minutes.
I'm impressed.
Not bad for me, right? Usually takes a lot longer. Yeah. So we went fast, right? We clicked through the demo. Does anybody have questions that have come in?
Yeah, let me take a look, see if anything is coming through on questions.
Sure. And I go fast, right? Because I'm here trying, everybody, I so appreciate everybody being here that's here today because time is so valuable. And so I move fast, but obviously I'm used to it. So once you get in this, as you use it a couple times, it becomes real easy, You know,
Hmm.
you can blast through it like I do. You can make it sing in a bunch of different ways to get the analytics that you want. But the main takeaway from a software like this is it's designed to do one thing real well for you, and that's to let you know if the mortgage is financeable at the purchase price you're paying. Right? Because if you know, sometimes even if the bank funds you, it doesn't mean it's a good deal for you, right? You don't want to
Right.
overpay ever, and you want to make sure that you're entering a transaction that's financeable, so that you don't end up a month down the road where all of a sudden the lenders say, "Oh no, sorry, all that work you did, we can't do it for you."
Right.
You know, what do you do, right? Um, I kind of breezed past that pricing page because today was more about a demo.
Yep.
But what is leverage, Stormy? Like $16 a month? It's not, you know, there's
Yeah.
hardly the cost of it is very minimal compared to the benefit we think that you get from being able to control your lending conversation, and also speak to your seller, or even speak with your agent over what you should pay for the property. There's people who use this to structure asking prices all day.
Right. We do
Hmm.
have a question that just came in asking, when will lending be back to normal?
When has lending
What's the
ever
new
been
norm?
normal? Yeah, because when is you're the banker, Stormy. When has lending ever been normal?
That's a great question.
Oh, you know, I'll tell you, that is a fantastic question. If I knew the answer to that, boy, I'd be, what would they call me, a swami or something, right? I really don't know, which is where, you know, and you just saw this software at work. This is the kind of thing that allows you to maneuver through lending today. So when you have these modern analytical tools at your disposal, this allows you, even in an abnormal lending environment, to be able to speak to the lenders, because the lenders will, here's what they tell us in a good market or a bad. They tell us that most people come to them and they're not aware of the commercial lending requirements. And believe it or not, they feel bad when they tell you no. You
Mm-hmm.
know, I mean, you remember, Stormy, when you were a banker, did you want to tell people no?
No, it's the last thing you want.
Right, you feel terrible. So, but you find that people coming in don't understand how the bank actually is taking a look at them for underwriting purposes. You just got to look under the hood of pre-commercial underwriting on a transaction that you may not have seen before.
Right.
So when you have markets like this, opportunities for people who can speak bank, which is what the software allows you to do, is to speak lenderese, if you will, does give you quite a bit of an advantage today. Um, I would say when we have about 6 months in the market of rents being paid at that traditional rate, and then we have, you know, cities that can demonstrate 5% or less occupancy over 6 months time, let's say, on balance sheets and reports from property owners that are verifiable, we'll start to get back into a little more normalcy in lending. How's that?
Good
But I
answer.
don't know when that is. It's so right now we use everything in our toolbox to convince the lender that we know how to manage property, that we know how to finance it, and we're very sensitive to what happens when we lose a rent,
Hmm.
because that's what they do. The analysis you saw me do, see, they do. What happens if there's no rent? What happens if there's one less rent? And then that's where you have to really, you know, when you say to a seller, I want to pay less, the seller naturally just says, well, why? Right. But if you say, I can't pay you what you want because the bank won't finance me, here's why, and you're using a leverage report, it tends to soften the discussion some, because the seller can argue with the software all day.
All day.
Right? I mean, what are you going to do? It's just how it is, right?
We have another question that just came in. Is a leverage confidential?
Yes. So leverage, you remember in the beginning, I came through and I come through at leveragecalc.com and I hit the sign in block, and then I have to put in a username and a password. So nobody is seeing what I just did unless I'm showing it to you live through Zoom, right? But nobody's seen what I just did in Lenderland. The only way a lender sees your leverage report, or anyone does, is if you share it with them.
Beautiful. I'm not seeing any other questions come in.
Cool. Well, we must have done a good job today.
Oh, here's one that just came in. Do clients have to pay extra to connect through Leverage Connect?
No, so that's a great question. When we did this, our objective as a company, and just vision, is we're actually here to help people change the lending conversation in commercial space. If you think of how all of us walk in today to see a commercial lender, we have some kind of a report or some kind of a booklet with pictures and stuff of our property in it, and we try to pitch the lender either online or in person on our transaction. And then when we leave the lender, every single one of us does the same thing. And it's a 4-letter word. It starts with W and it ends with T, right? And it's wait, right? So I come in, I see the lender, I do a nice presentation, I walk out and I wait and I wait, right, Stormy? And I wait. And how am I waiting, Stormy?
You're not
Right?
sleeping at night.
Yeah, I'm not real good at waiting, right? So we want the lender to answer us, right? And we can't wait. We have a transaction, we have an offer in, we've got things that we're sensitive to on our side of the ledger as the investor. So we need an answer from our lender, right? So what we did with this is we priced it as our feeling was you can use it one time if you're just doing a one-time transaction, use it for a month and off you go. That dashboard's key because you saw me use it for a refinance. So that's where you get the 12-month access that you can renew. And that's that $197, which is the $16 a month. $17 a month I was talking about. So it's not a lot to get that in. And we didn't want to start loading it up with additional fees. So you can connect with the lender from our end. We don't charge you for connecting to the lender. And so whatever business you and the lender do together is between you and the lender. We're just here to facilitate that connection with a quality report that tells the lender that you've gone through leverage and you're basically leverage approved, you're pre-qualified to be able to move on the commercial loan for the transaction. I hope that helps.
Yeah, that's great. Perfect. No other questions came through?
Cool. Well, fun. So hopefully this was a help today. We did this in a half hour. Always introducing to tools that we all use out there. We're always, anybody has any tools they use, share with us because we love all the new technology tools that we can use. If you want more information on leverage and you want to talk about your specific transactions, things you're doing, make sure it's something that it would be good for you. You can always reach out to Stormy and connect. And if you want to try it, go in, try it out. You get the 30 days free. And if it's something that works for you, we always want to hear from you. We love hearing all the stories, and we have lots of them. We have fantastic stories from people who use this. And it's especially fun for me when I hear what the banker's reaction to this is when they see the reports coming through. And people are like, wow, this was really cool. It made my process so much easier. And they are empowered and they're happy. And that's what we're about here at Leverage. We're here to make that lending conversation different than one you've ever had before. So thank you for your time today. And if we can help you at all, we are easy to find, right, Stormy?
Yes, I did put my contact information, including my scheduling link. So like John said, please feel free to reach out to me. I would be more than happy to connect with anyone.
Right on. Well, thank you very much. Yeah, we'll see everybody again soon.
Thank you, everyone. Bye.